What's up, Trust Engine and Mortgage Coach community? Dave Savage, Chief Innovation Officer of Trust Engine, and I am interviewing Josh Friend, the founder and CEO of Accelerate, a badass CRM that has, Josh, make sure I get these numbers right, over 300,000 applications, mortgage apps. So that means credit apps, and over 4 million prospects per month go
That's
through your
right.
platform.
Yep. 3 to 4 million prospects and 300,000 applications. And yeah, so we have that data plus all the touch points and calls and text and emails and interactions. So we process quite a bit of mortgage data right now.
Yeah. And guys, it's never been more important that you optimize that. In fact, we might just, the headline right now, working headline is optimizing conversion is the name of the conversation here. And I'll have Josh unpack his history in the mortgage space, but what we really want to do is we want to get to specific concepts, strategies, and tactics.
Yep.
To optimize conversion, because that's the best way to optimize profitability, and there isn't a profitability crisis in the mortgage business. Josh, I know you also have over 100 lenders. What percentage of the lenders do you think are profitable nowadays? And it's pretty close in terms of they're almost profitable. Like, I'm finding in conversations I'm having that most lenders are within 10 basis points of profitability.
I would say you're about right. I mean, I think, you look at the MBA study, it's still, the average lender is still not fully profitable. I can tell you we have lenders that are, and we have some lenders that are really growing rapidly right now. So it's which is kind of one of the messages I've been trying to tell people. If anything you get from what we talk about and what we do is, like, there's going to be winners. There's going to be winners in this market. There's going to be, if you're a loan officer, there's going to be multiple people making $1 million this year being a loan officer. If you're running a mortgage company, there's going to be people making millions of dollars doing that again. So you just have to figure out what that looks like. And to your point of optimization, it's really, all right, last several years, it was easy. Lots of people wanted loans. Fewer people want loans now. Now, how do you really manage that, right? How do you make sure you get as much of that business as you can? I think that's the name of the game right now.
Yeah, no, it is the name of the game. And it's, one of the reasons why we're having so much success with what we call the Mortgage Coach 10X strategy, where it's really just all about how to get one more loan, how to get one more realtor this month, and how to do it in a way that reduces price exceptions and improves profitability. I mean, that's my full-time job right now as with Trust Engine. So before we get into topics and strategies, just real quick, I know you ran a big consumer direct mortgage organization. I know you've trained a lot of loan officers. Give us a quick backstory on that, and then we'll get into tactics and strategies.
Yeah, no, I think, just to kind of give you an idea, I was a loan officer in 1999. So I became a loan officer. I was at a company called LoanWorks. LoanWorks was IndyMac Bank's first call center before it was IndyMac Bank.
Oh,
it was still part of Countrywide. So Countrywide had a bunch of service and what we would call non-QM, but they were just non-agency loans at the time. And IndyMac serviced them, and they bought a bank. Long story short, I was a loan officer there. And then 2003, I was doing great as a loan officer. I was always in the technology and kind of thought I could do some of this on my own. I was closing 44 loans a month. I did the math. I was bringing in $500,000 a month in revenue for IndyMac Bank. I'm like 26 at the time. I'm making 35 grand a month, which is great. But I said to myself, you know what? I'm bringing in $500,000 a month in revenue to this company. I'm doing 3 times the loans everyone else is doing. I could do this on my own. Even if I'm 10% as good as I am, I'll make more money. So I left, went and did it on my own, and started building technology along the way. So since then I did a secondary trade desk. I trained our underwriters. I put our operations team in place. I've worn a lot of hats in the industry, which has been a lot of fun. And I built Accelerate in 2012 for a community bank I owned part of. I had a mortgage company, owned part of a community bank, and it just came out of the need of what that was. And I think what you said, Dave, when you said it's about one more realtor, one more loan. The truth is, Accelerate, what I did and why I was successful just as a loan officer, came out of that mentality. And in order to get to that mentality, what I did is I always would say, know your numbers. You want one more loan? Okay. How many more applications do you need to take a month? How many more people do you need to talk to get those applications? How many more credit pulls do you have to talk to? How many, but you want one more real estate agent? How many more realtor pitches do you have to do? How many more phone calls do you need to make? And I would literally, I had, when I was a loan officer, I had my little sheets of, here's how many calls I had to make a day. How many times I'd ask for the business, how many follow-ups, and I would keep track. And I knew that my conversions were 2%, 5%. And so if I wanted more, I just had to call more.
Right.
I could get better at the sales game. And guess what happened? As you called more and you were intentional, you also got better at the sales game. So it wasn't just like you got more, you like incrementally got even more, right? So I built the software originally for a mortgage company to keep track. Hey guys, team, here's your numbers. You need to know what you're doing today. You want to stay on track. You need to have an insight of what you're doing so you have goals, right? It's hard to think about sometimes, I got to close a loan today because it doesn't fund today, but I can concentrate on getting 3 applications today. And I know if I get 3 applications today and I explain the benefit and I go over the process, that I'll get 1 loan tomorrow or one, you get the math. So it's really just know your numbers. And so that's really where my passion of Accelerate came out. It was how to manage the numbers so people could get 1 more.
I love that backstory, and it really makes you and I'm pumped about the rest of this conversation, because my whole career, I was obsessed with conversion, and I wanted more leads because you got to have leads to improve conversion, but it was how can you ask better questions and deliver a better solution and a better presentation to a consumer so that you optimize conversion. That led to the creation of the total cost analysis and the mortgage coach that was, and I was solving for being the obvious choice like that. And there was a point in time where mortgage coach, that was our tagline, mortgage coach, be the obvious choice, because it was all about, I would talk to someone and I want to just be like, this dude is a no-brainer. I trust him. I like him. He's creating valuable experiences that I've never even, I didn't even know, and a lot of people don't know it, but the name of Mortgage Coach, before it was Mortgage Coach, and we actually incorporated it as Wow Tools. Because when I founded Mortgage Coach, I was creating a Wow tool. I kind of figured that if I could get someone, and I was trying to get them to actually say wow out loud, that was kind of the game I played. And some people did. They're just like, wow. And then I would be like, boom. I was just like, that was my game, wowing people and then, measuring conversion and driving conversion. So we came from the same place, similar tactics, but I was the conversion guy. You were the let's talk to more people guy. So let's it's 2023. Both of our careers, mortgages have pretty much gone down our entire career, and they hit the bottom. Let's all pray that rates don't get to 2% again, because if they do, very bad things are happening in America. That's the only way rates get to 2 or 3 again. Let's hope they get to 4 again. 4.5 would be cool. But I think we need to plan that rates are going to be, 4.5 to 7% going forward. 60% of people with mortgages have a rate with 2 or 3%. So we're going to have to deliver advice. And then there's a profit crisis, profitability crisis in the mortgage business right now. And one of the beliefs I have is that if lenders would really make training their loan officers their #1 priority around using the tools they pay for to improve conversion, which is their CRM and Mortgage Coach, those are, when people buy Mortgage Coach for their loan officers, they're buying it because they want, they're not buying it because they just want to spread financial literacy to America. That's kind of that's nice, but they're buying it because they want better conversion. So you cool with centering the whole call around, and we'll just go back and forth. You share an idea.
I love what you just said, Dave, the training part. I mean, you couldn't say that more important, that the value of training your loan officers to use the tools. I mean, I built Accelerate for my own loan officers to use originally. If you worked for me, you did a 30-day training program. Believe me, you knew how to use the software, because that's how I could get you to do the job better, or help give you tools to make you do the job better. And we spent tons of time training people, so everyone knew how to use the software. Now we go to lenders at times and they go in and they don't train. None of the executive team ever looks at the CRM. They don't look at mortgage. They don't look at the tools. They don't understand how to use it. So when they have a loan officer who's struggling, they can't be able to say, hey, let me help you do your job better. Then we have lenders that train really well. And so when they have loan officers that struggle, they say, hey, let me show you how to do your job better. And guess what? They can. Like there's ways. Spend time training your people. That's like that's a massive part of it. And you said something else a second ago about the trust. You want people to trust you, want to provide value. And that is the key in this game, right? We are selling a commodity. But the only thing that's not a commodity in this industry is your service. And so what does that look like? Right. So you have to build trust, benefit, rapport, and price, believe it or not, people think price is the main driver in decisions. It's really not, though. It's most people, once you build rapport and you've taken an application from them, you have their social security number, they're not really apt to want to do that again with another person. It's kind of an intimate experience of going over, here's all your money and income. And so once you have a good relationship, if you do that well, you should get the business.
Yeah. So let's go back and forth on tactics. And I can't remember how long ago it was. And I feel like Alex was on it. You were on it. We did a webinar. It was last year. I'm pretty sure. I don't think it was this year, but it could have been this year, the way time flies. But our entire career, rates have gone down. Yep. In our entire career, speed to lead has been the single most important factor to conversion. Yep. The first one there wins. Now, not 100% of the time, and I'm going to ask you in a minute to share the stats. Now, I have this thesis that in this new era of lending, and I do believe it is a new era of lending when the majority of consumers have rates that are half or less than half of what they are now and what they will ever be. Even if rates get into the 5s and 6, 50% of the mortgages in America are half of that. And for first-time home buyers, there's a financial, it's a affordability challenge. So I think it's like a new era of lending. And so with that new era of lending, what I'm training on and what I'm teaching and what I think is the key is speed to need. So I'm going to share my thoughts on speed to need, and we can kind of riff on that. But real quick for the audience, because the data and the stats of speed to lead, what's the data and stats on that?
Well, so speed to lead, I can give you a handful. MIT did a study, just if you're actually calling, when someone actually says, hey, I want to talk to you, if you call them within the first 5 minutes versus 20 minutes, you're 100 times more likely to get a hold of them in 5 minutes versus 20 minutes if you get a hold of that person.
Wow.
Someone who does a loan, it's almost 300% of the time more likely to do the loan with the first person they talk to. The CFPB did a study a handful of years ago trying to understand how people shop for mortgages. They found that it was 74% of consumers did one application with the one lender and did a loan. So 3/4 of the time, the consumers, the first person that gets the application gets that loan. So you got to talk to them first, get the application. And if you put yourself in that driver's seat, you should get the business. That's really how that works.
No, I do feel that double app is a little dated because, something that's different now is that if you say the word mortgage in your house, you're getting mortgage apps. And now it's also a lot easier to take an app. It's a whole lot easier. So I don't know if you have any new data, but I do think there's more double apping happening in the market. And I do think, when I'm on calls, I always call it omni shopping. I'm like, even if someone doesn't want to shop you, they're shopping you because you're popping up in their Facebook.
But they may not take a complete application.
Correct.
So this was a 2019 study. So it's dated by 4 years, but it could have changed. But what happens is if you think about this, how many times do you want to give someone you don't know your social security number or access to your bank account or your tax returns or your
it's a painful experience. It's like going to 2 different dentists. Like, you don't want to go to 2 different dentists.
That's a good way to put it. Yeah. So yes, but there you go. It's getting, that's been the game is you talk to them, you get the business, right? Now, I think what you're saying is it is changing, which is the part of the business I've always liked is can you help someone? If you can figure it out quickly, you can get the business, right? How do you figure out how to help them or where they need help and explain that to them?
Yeah. And what we're finding, because I even talk to builders, from the time that someone pre-approves, let's just focus on purchase because refi, aside from cash out refis and need-based refis, which by the way, that's part of speed to need is, there are a lot of consumers,
Life changes.
that don't know they need. And it's one of the things we're trying to do here at, Trust Engine with our borrower intelligence platform is anticipate the needs and then be there with the solution before they call you.
Yeah.
Like speed to need is actually about preemptively getting to the consumer before the consumer actually calls you. So we'll talk more about that, which by the way, guys, when I talk about tactics to speed to need, that is one tactic. Make sure that you are anticipating the needs of as many consumers as possible, and not only having that data signal, but delivering. Here at Trust Engine, we have two kinds of deliverables. We have what we call our, MortgageCoach total cost analysis, which is a complete conversion solution. And then we have, simpler creative solutions that drive applications, anything that drives it out. So what are your thoughts on, I guess, what's another tactic when you think of speed to need? What's another way to get to the speed of the need faster?
So, I mean, I think in a sales approach, when you're talking to a customer, the way I've always looked at it, and I train, and I think this is probably a good way to do it is if now I'm on the phone with you, if I can give you a loan, first, let's make an assumption that there's a need for you to get a loan. You're buying a house, you do need to cash out, and you do have enough equity, and it actually makes sense for you to get cash out. Whatever, there's a real reason for a loan. And I'm trying to sell to you, and you don't want to buy from me. What I always say is this: there's three reasons why people say no to you. Number one, I don't know you, I don't trust you. Number two, I don't understand the benefit. Number three, I think I can get a better deal elsewhere. What I always would say, if you want to focus in on how to overcome, first you have to figure out what one of those three reasons, why are they saying no to me? It can be all three of them, by the way. It can be two of them, it can be one of them. What I always said is focusing on this one, the benefit. Okay, so you need to talk to your wife. You need to think about it. You need to talk to your husband. Well, I want to make sure you understand the numbers. So when you speak to them, let me go over this again with you. Or, okay, great, you're in this process and you're not sure what taking an application with me, but let me just tell you why you should work with me. Or what is it that you need? So it's you've done the job of uncovering where the need is, what they actually do need, and then you address it. Hey, so your big concern is closing on time. You're trying to buy a house. It's a competitive market. Well, let me make sure I can tell you how we have a 10-day guaranteed close or a 25 close day, or whatever it is that you have in your bag of tricks, your repertoire, to say, I can fill that need. Your need is to feel like you're getting a good deal. Well, let me tell you, we have great rates. We have a 4.8 customer service review. Whatever that is, you focus in on that need that they want. And then usually you can satisfy that need. And then if it's, I don't know you, I don't trust you, let me tell you something. When you start explaining to someone why they should get a 30-year versus a 15, why they should pay a point versus not, you say, it doesn't matter to me if you pay the point or not. I make the same amount of money. Let's just do the math. How long are you going to be in the house? Okay, you pay a point, it's $4,000. It's going to save you $137 a month. Let's divide that out. That's 33 months. Yeah, that might be where, you do that work with them. And then you give them something like the total cost analysis, and you actually present, here's actual, all the figures, the trust goes way up. So you're getting rid of that trust thing. And then you've hit the second thing is now you're really addressing their need. And then if the third thing is price, most people are like, you know what? It's like going to Nordstrom's versus going to Ross. Right? They sell the same clothes. It's just, I'll go to Nordstrom's because at times it's easier because they're all, lined up and in order. And Ross, I have to go look through a bunch of bins to find my size, right? So people are willing to pay for service. We do it all the time. So then it's, the service price thing doesn't happen because you're giving them what they want, which is really helping them fulfill their need. They want to feel heard. They want to know they can close the loan. They want to know they can always get a hold of you. They want to know they're working with a reputable lender, whatever it may be. You have to find out that is, and that's usually challenging why they're saying no.
So let's kind of review some of the tactics of optimizing conversion. And right now, I think we're going to call this, if you're watching this on YouTube, optimizing lead conversion with Josh and Dave. Got to be there first. And Josh gave you a lot of data and a lot of stats why you got to be there first. And I would say, kind of push that further. You need to leverage data. You need to leverage a borrower intelligence platform to get there before they need it. So how much faster can you get than before the consumer even needs it? You need to connect with people. They do need to like you. They do need to feel heard. You need to understand that consumer beyond the transaction. Like, what are their long-term goals? And then Josh talked about giving options. When I invented the total cost analysis, I used to call it total cost selling. And I also used to teach what I'd call option selling. And, one of the philosophies I was solving for is that I had just learned in business and life that authorship is ownership. As a manager, I learned that, if I come up with a new process and a new standard and I tell my team, hey guys, new process, new standard, let's go. That didn't work as well as if I said, hey guys, look at the metrics. I think we could do better. Let's all come up with a new process and some new standards. And we authored it together. They owned it. They did it, or at least they'd start doing it. Then I just need to be the reminder, like, oh, remember guys, remember that new standard process we came up with? Instead of like, guys, we got to do it. Same thing in selling. When you author the mortgage strategy with the consumer and they pick the option, they pick the loan officer, science of selling. And then one more I want to throw in the party. And I think this is going to be really important going forward in the mortgage business. And I used to call it, from a sales standpoint, future casting, where I would, hey, look at how much you're going to save per month, per year, for 3 years, for the 5 to 10 years you told you'd future cast. And I do think to get a consumer to say, you know what, I think I should sell this home with a 3% loan and buy this new bigger home with 6%. Like, the only way that's going to happen is, first of all, if they just hit the lotto or got this, double pay, or you showed them that, what, selling and buying will actually improve your net worth and will actually help you achieve financial freedom faster. Or you're going to have to show them, hey, what if you rented this house out, bought this new house, and look, you got the future cast. You got to show them the long-term value of that decision. Any thoughts on that?
Yeah, I think that that's what you just said there. The last part, I think it's a great thing is, yeah, if you're looking at someone who's trying to just manage, their dollar and their retirement and understand that, hey, should I move up, or, what I should do? I think what you just said, giving them options. Hey, rent your place. If you're at that 2% and you've owned this home for a while and homes continue to depreciate, my guess is rents are higher than your mortgages. Probably, right? You could probably make some money on that. Now let's help you get into this. That rent differential could potentially make up for the money differential of buying this new place. Now you're building equity in 2 places. But what you said there is, I was a loan officer. What made me successful is I was all about the numbers. Get a calculator, get a pencil. We didn't have tools like MortgageCoach in 1999, or maybe there were, but I didn't have an IndyMac Bank, and I didn't see them.
Almost. Yeah, almost. Well, I was just launching. I had not. Just like you created it as your superpower for your company, I created it as a superpower for my company in June, and I did start selling it publicly, but it was like, you need to know me or whatever. And then it was June of 2000 that I really okay, let's scale MortgageCoach.
Yeah. So you get it. So, I was all about the numbers. Like, if I was going to build trust with you, and I would say this, you don't tell someone, here's like I always would tell loan officers, don't tell someone if they take this versus that, you're saving $50,000 in interest over the life of the loan. They actually don't know what that means. I don't know what that actually means, because if you actually look at payments versus the interest, it doesn't work the same way. Money doesn't amortize the same way as people realize it does. So what you really want to say is, hey, let's do this. This is the payment. This is the payment. Here's this dollar amount. Your house is worth 300,000 here. This new house you're going to buy 700,000. Appreciation's 5% across the board. You're going to gain 10,000 equity here. You gain 35,000 equity here. Let's do that. 45,000, show them and do the math, which I know what MortgageCoach, you give them the math and then give them the options. And then they start going, oh, they can trust you. Because when you tell someone, I'm going to save you $50,000, or, hey, if you do this by buying this other home is going to help you retire sooner, people are going to go, yeah, right. How does that work? Just because you say it works that way, give me the math, give me the numbers, show it to me. And then, oh, now that makes, and here's the other thing you have to always tell people, remember. There was a Harvard study that said the average gifted student, it took them 6 times of hearing something before they could get it and understand it. So when you tell your borrower they're saving this, and you tell them once or twice, and they're like, oh yeah, I get it. Chances are they don't get it. Just remember that. Go back to it. If you can't, if it makes sense and they're like, I don't think it makes sense, you just go, oh, they must not get it. Go back to the beginning, explain it again, walk through it, make it simple, explain it like they're a 13-year-old. If you need to, get a crayon, right? Make it real simple, but just know, get back to the numbers. That's really what it comes down to. If you're trying to separate yourself right now, is that service is finding someone that you can actually help and show them how you can help them.
All right, so let's net out some of this. I'm going to show a few slides. I actually had Michael Frantoni, chief economist for the MBA. I had the chief economist for CoreLogic and Rob Crispin on a call yesterday. And I'm going to show a few slides that I went over during that conversation. I mean, first of all, I went through all this, data. By the way, 42% of Americans own their home free and clear, guys. And the rest of America has a lot of equity, so, this is a chart just reminding you and visualizing, these are all the families with 2%, 3% mortgages, 4% mortgages, and interest rates are up here. So there are problems and opportunities, but here's netting it out for you guys. First of all, if you're an executive, what would 10 basis points have done for you? If you were 10 basis points more profitable all year long or last year, how much of a difference would that make in your business? And this is a company where their mortgage coach loan officers, which by the way, that just means loan officers that are selling speed to need. They're trained on speed to need, were 6 basis points more profitable, and they were converting at 8.7% more. This is another lender, NFM, where the loan officers that were trained on speed to need and that are using advice, they were actually 65 basis points more profitable than 93 loan officers versus the 300 and some odd loan officers. And they had a 10% better conversion. So guys, what would that mean? And so this is what I'm going to advocate. And Josh, I want to get your, how can people use your CRM in a minute? How can people follow you on LinkedIn to go from speed to lead to speed to need? This is the new standard. This is why I do so much social media. That's why I have this YouTube channel, is that I believe in this advice revolution. And that's why, this entire month of August and the entire month of September, I'm every Tuesday at 9:00. And Josh, you and I should collaborate afterwards and think if there's a way to build you into this, because I'm having hundreds of loan officers on these trainings every Tuesday at 9 live. I'm getting hundreds, if not 1,000 people watching the video. And it's all about one extra loan a month because we need it right now, one extra realtor month because we need it, and do it in a way that reduces price exceptions. And by the way, one little thing, guys, this isn't the solution. If the way your loan officers are quoting rates right now, this is, by the way, Josh, isn't this how you quoted rates in 1999? Seriously.
No, I never even did it that way. I would build a presentation and quote rate and give it to them in a more eloquent way.
Most loan officers quote
rate on GFE. That was it. Here's 100%. And then they would wait to see if they ever called them back, which I never understood that either.
Yeah. Well, yeah. And the fortunes of the follow-ups. We'll talk about that too in a minute. So guys, this is every manager watching this. All of your loan officers need to be trained to show options, 2 points, 1 point, 0 points. And then by the way, because rates are so high and we're going to be refinancing everybody and within 2 years, hopefully less than a year, show them, the future of rates. A lot of people call that date the rate, marry the house. Loan officers need to be trained on this. And remember, future cast. This is an example of a first-time home buyer that was going to rent out 2 of the bedrooms because they were a first-time home buyer, and show them that, look what that could look like in 5 years. You need to future cast. So let's go into wrap-up mode, but I want to pull out some CRM because you've got one of the industry's top CRMs. What was the number? 300,000 apps per month are going through it. What are, and we integrate, our data platform integrates, our total cost integrates, but what are some of the best practices in using Accelerate, your platform, that could really improve conversion for anyone that's watching this right now?
Yeah, I think it's automation, right? So, I mean, if you really think about this, if you're a lender, a loan officer, the amount of contacts and signals, buy signs, and things that are actually going on at any given time are greater than any one person can keep in front of and follow up with, right? It just, you're never going to be able to have a loan officer that's going to get all the business that they can get. They just don't have the capacity, but you can build that in, right? So right now it's automation, right? You will make sure that all these touch points, and lenders are very horrible at touch points. But it's just we've done an MBA study contact for 5 different years. We've over 1,500 lenders. We apply online, see if they respond to us. Over half the time, we don't even get a response. So if you can look at our line, the studies of that, it's amazing. But automation right now is huge. And then then the next step is, which what you guys have too, is like using data intelligence, but then also using customer intelligence and everything around that customer. So like in our system, you have text messages, phone calls, all the phone recordings. And now you're gonna have emails in there from your Outlook. You have all the communication sitting in one spot on your customer. And so as they interact with you, they call you or they email you, the system will know that. They respond to your message, they respond to your text message, the system knows that. So then it can build the right kind of follow-up. So you can actually, it's not just this old linear automation that a lot of systems have that are kind of unintelligent. It's going to be intelligent where it follows the customer and communicates in the way that they want to be communicated with. So I think just making sure your system you're using actually can do all of that, right? Can manage a customer and can manage the life of a customer and all the communications to the customer. Then once you have that, automate it, right? It's not rocket science. It's not like every borrower is different. Yes, there's many different scenarios, but they all fit into certain funnels. Figure it out, automate it, and look at the numbers, and you'll see that you'll increase your conversions, right? I think you showed some great
Massively,
stats. Yeah.
massively. So I believe every lender that's watching this can improve conversion by 10%. And every lender that's watching this can
It's
improve.
even more than that. So I'll give you one last stat because you can pull this down. It was a pretty big study we did. We did a study over 2 years, over 275,000 hand raisers, people who called the lender either from radio, television ad, or applied online. That turned into 18,000 funded loans. Okay. What we found was that people who used all of our these are our customers, by the way. We looked at 50 of our customers, and 25 were using 2 or more engagement pathways, which mean they're using email, text, and then like social media outreach. So we have multiple ways to engage with customers versus the ones that weren't. Almost across the board, you're like 100 to 150% higher conversion ratio on their leads for the ones that did this versus these ones were doing like a one-way, or they're using someone else's platform to do some communication. But the people that actually did 2 or more were almost double the conversion. And it was 275,000 loans or leads over 2 years and 18,000 funded loans. That's statistically very valid. So it's just it's massive.
Can you give me a link to that so that when we put this in YouTube, there can be a link to that?
Yeah.
So guys, if you're watching this right now, in the show notes down below, there'll be a link to that study. Also a link to learn more about Josh. Highly recommend you follow this dude on LinkedIn. I mean, he is definitely one of the people I whenever I'm consuming and I'm reading on LinkedIn, which isn't every day, but it's a couple days a week that I try to post every day on LinkedIn and bring leadership, bring inspiration to the industry. And you seem like you post every day?
Yeah,
or like 3 days a week?
No, I try to post every day, and it becomes hard, and sometimes I don't get every day, but I try to at least 5 days a week.
Yeah, no, I do too. I don't try to post on weekends. Every once in a while, I'll kind of do my weekend homework, but I try to post every weekday, and I probably average 4 days a week. But guys, if you are an executive, if you are a loan officer, like this is value. There's a lot of noise and what I call busyness on social media. Josh is one of those guys. It's business. He's delivering improved business results and things you want to know about, at least things I want to know about. I do want to make sure you caught that last point, multi-channel communication. If you're going to be remember, speed to need, you need to be speed to lead. And the combination of email and text, understanding the preference of the consumer, the fortune is in the follow-ups, like,
Yeah.
and so I hope everybody, really listens to this. I even think re-listens to this. I don't know about you, Josh, but I'm going to do at least 1 or 2 LinkedIn posts around this conversation because I feel like we really nailed some key concepts.
Yeah.
And, if you're not already, a Trust Engine client, just trustengine.com or private message me. Josh, what's the best way for anyone that's wants to learn more about Accelerate or learn about you? What's the best place and way?
Accelerate.com, or you can message me as well. You can go to LinkedIn and reach out to me there.
Cool. Any closing thoughts? Anything you haven't got to say that you want to make sure you say before we wrap?
No, listen, I appreciate being on this, Dave. I know I've always talked about this. I've always had a passion for, not just the lender side, but the loan officer side. And just, and what I can say is this: if you're in this industry right now, know this is still going to be a $2 trillion a year industry. There's still going to be people making $1 million a year. If you do this right and you do this and you're effective and you really hone in now on what you're doing over the next several years, you're going to really benefit from it. Right. So you just, keep your head down. I've never seen hard, diligent work go unpaid. So if you do that, you're going to get a reward.
Have you ever, I've been saying this a lot on stage. I'll probably get tired of telling this story, but have you heard of Warren Buffett's 3 eyes?
No.
The Warren Buffett 3 eyes. So it's how Warren describes how markets are created and business cycles. And he says it always starts with the innovators, and then along come the imitators, and the third eye is the idiots. And so the reason I say that right now is because the people that he's talking about are, loan officers that are making $1 million a year. They're innovators. Like, they're not doing the same thing this year as last year. Like, they are getting their advice game on. They know how to talk about buy downs. They're bringing innovation to the market. So I do want to just make sure as we close, yes, there are people doing those things, but they're not doing what they were doing in 2020 when it was a $4 trillion a year. It's a purchase market. It's like they're innovators. And so everyone listening to this, especially the C-suite, you need to innovate your sales force. Like, they need to upgrade. One last little plug for what we're doing. And it's really just a plug for training. And this is free, by the way, guys. MortgageCoach.com/10x. And I am interviewing, like, every person I'm interviewing is $100 million or bigger producer. Like, these are people that are making $1 million a year. Still, all of them have used a total cost analysis at least 1,000 times. Most of them, Jeremy's done like over 5,000 TCAs. You can just click and watch that and learn how he's reducing price shopping. Kelly Zitlow will be next week. Probably most of you are watching this, it's weeks from now. These will all be green and it'll be videos. And then there's a playlist, like a playlist where we have the long form content and we have the short form content. There's I'm a big, Josh and I both connect because we're sales guys and we also like to train salespeople. And so I created a training playbook that, like, I wish that I used to have to create for myself, like training playbooks. And by the way, it's all for this market. And for any of you enterprise clients of ours that use Mortgage Coach, within all of this, there's training on how to be an advisor using Mortgage Coach. At the bottom, we do live training every single day of the week. You can sign up for the live training, so I just had to close on that. Check it out.
I love it, Dave. I think if you're a loan officer or someone that's out there, I don't think there's anything better you can do with your time than start filling yourself with some information. Like I remember, so my son, who now works for Accelerate, but when he first became a loan officer, and I was like, are you perfecting your craft? What are you doing to kind of up your game on your downtime? I said, go to Dave Savage's YouTube channel and listen to his daily updates and his calls, because it's good to hear other people talking about what's working and what's going on, right? Just, you're not alone, that there's stuff that's out there, and it gives you a place to spend energy and time. So I think it's super valuable to be watching stuff like that. So Dave, I really appreciate you having me on. And next time, since you're like maybe a quarter mile from me, we'll do this in your backyard and we'll go swimming.
Yeah, no, I don't know if we'll be swimming, but at least not on air. But yeah, no, hey, Josh, I look forward to seeing you and really appreciate you, brother.
Awesome. Thanks, man.
Take it easy, man.
All right.